Yeah, good morning. This is Ravi Kanth Miriyala, right? Today, we'll be doing as part of our discussion Group 2 Accounting Standards, ICAI questions we will be answering. Okay, yeah, that is our part of discussion. Okay, right. Before getting into the subject, yeah, one small information would like to share. Right, Rise with Yashas. Yeah, it is an early bird batch. That is early bird batch. Before the results, we have already started a batch so that you can save time and you will get sufficient amount of time for your examination for May attempt or November attempt. Okay, right. This is for basically Group 1 100% comprehensive batch CA Inter Group 1 coaching, which started on 5th January. Yes, I said 100% comprehensive and 100% English batch. Okay, right. Yes, you can subscribe to this, right? You can subscribe to this course, and I'm sure 100% you will be enjoying the subject and 100% concept clarity. Yeah, everything in ICA material is going to be done by us, right? And this is our team. Okay, right. Accountancy is going to be handled by 3 teachers. One is Mayur sir, Rajavardhan sir, and myself. I am going to teach accounting standards. Yes, and Dhananjay sir is going to handle casting. Vijay sir is going to handle law and taxation in this batch. Yeah, when you are subscribing, do not forget to use the code YESHASLIVE live. Yeshas live. Okay, right. If you use that code, you will get 10% discount and other benefits also will be available. Okay, my dear. Yes. Yes. So one more information. Yeah, generally students do subscribe for a plus subscription. There is one more subscription that is called iconic subscription. Okay, in this iconic subscription, yeah, it is, they'll charge obviously premium because there are premium services to the student. What are the premium services? Yeah, one is personal coaching. Okay, yeah, and in the sense, like if you get a doubt solving session, personal coaching, in the sense if you get any doubt, you can obviously speak to there is a mentor for you, and you can speak to the mentor and he will arrange a call from the respective teacher or subject matter expert. End of the day, we will ensure that you do not have any doubts, subject is clear. Yeah, that is what our target. Yeah, that will take care of you individually also. That is one. Next, we have evaluated test series. Yeah, I'll tell about it in the next slide. Okay, and printed books with respect to plus subscription, we will share generally a soft copy of it, or we will tell you have to purchase this book if it is a published one. Okay, right. But with respect to this, what is that iconic program, you will get printed material. Okay, it will come to your home, right? And industry expert session will be one more additional benefit. Yeah, experts in the industry will obviously come on live and they will share their experiences in their great journey, right? So that's obviously going to motivate you. That is, yes, that motivation is, I feel, very much required in this a CA student life, obviously. Okay, right. So these are all the premium services. That's why the premium charge also will be there, right? But worth paying that. Okay, yeah, this is about mentoring, right? Evaluated test series, I said. Yeah, this is 40% of once you are every subject three tests will conduct. Okay, when you conduct, once we are through with 40% of syllabus one test, 80% of syllabus another test, 100% of syllabus one more test, and you will be writing from your home. You will be sending the soft copy. Our subject matter expert only is going to correct your paper, and it's correct. We'll come back with the feedback and where to develop. Correct. We'll prepare some strategy. Will help you in your examination. Correct. In the course of examination preparation, it will be obviously helpful to you. If you do not assess yourself, and direct attack on ICAI is obviously any day dangerous. Okay, so keep that in mind. Yes, iconic subscription. Yes, these are the prices available, and I told you use the code Yashas Live. Okay, right. Iconic subscription is there for CA Inter if you're taking a CA foundation plus CA inter combination, yes, for that also ICANIC subscription is available. Okay, yeah, CA intermediate mega combat. Okay, so this is 30th January. We are 30th January at 12 p.m. There is some test kind of thing. Okay, right, this is for a scholarship. Yes, and this is a very good opportunity for the students to win. What is this? Great prizes. Yes, there is the iPad and JBL speaker, Amazon some vouchers. Correct. Now maximum worth of 1 crore rupees. That is, I mean, it's for all the students together. That means it's not just one student is going to win. Okay, right, so 40 questions will be there, 60 minutes. If you are able to crack it, then yes, you are going to get a lot of, correct, top 100 rankers are going to get this 100% scholarship, free education. Okay, at the same time, right, chance to stand out and promote oneself to the next level. Questions curated by top educator. Yes, obviously. Yes, enroll yourself. When you are enrolling, use the code again, AS Live, you use it. It's surely helpful to you. Yes, you will get good education, at the same time good gifts. Correct. So why do you lose opportunity? So enroll immediately and be ready to write to the exam. It's surely helpful to you and your career. Okay, right, let's go to the right, just a second. Yeah, let us go to the today's topic, that is the main subject. Perfect. Yes, here, just a minute. Yep. So group 2 accounting standards, that is what we told. Correct. In group 2 accounting standards, as you know, there are totally 13 standards are there in your syllabus. How many? 13. 1 3. Yeah, so which are all the 13 standards? Which are all your 13 standards? Yeah, 13 standard, 4 5, correct, 7 9, yeah, 10 11 12 13 is there in group 1, so 14, yeah, 15 is in out of, I mean not in CA inter, 16 17 8, 18 is 17 18 19 20 22 24 26 29. See, so many standards are there. Yeah, in this session, whatever is possible to the extent, okay, I'm going to complete it. Yeah, rest of the things in the first week of February. I will be taking some more classes, obviously, on YouTube. There I will complete the remaining part. It will take 2 to 3 hours. So 2 to 3 sessions you can expect. We will be able to complete this entire information. Okay, right. So let us go and start with one by one. Okay, just a second. Yeah. So this is the list I said. Just a second. Let's go to the illustrations. Directly I'm going to illustration. Yeah, we are doing accounting standard. Yes, we are doing accounting standard 4 related question and answers. Okay, my dear. Yeah. See, X company limited. Yes. There is a theft of cash. Theft of cash of what number? 5 lakh rupees by the cashier. Cashier only took. Super. Okay. In January 2001. But was detected in May 2001. Yeah, they found it in May 2001. The accounts of the company were not yet approved by the board of directors of the company. It is not approved by the board of directors of the company. Okay, that means still books of accounts are not closed. Correct. So by that time only we understood that in the May itself we understood that this guy took money and went off. Okay, excellent. Okay, now what should I do? Whether the theft of cash, will it be adjusted in the books of? Correct. Now, where do you recognize? This is a loss to us. Obviously loss to us. Where do you recognize this loss? Do you record it in as on 31st March 2001 or 1-2? You understood my point? Is it in 2020-21 financial year or 21-22 financial year? Yeah. See, first of all, I say it is very directly and very clearly it is an adjusting event. Yeah, why is it adjusting event? Correct. Now why is it adjusting event? Yeah, see, situation, I mean, what loss has already happened. That guy theft already took the money and went off. Correct. Now he already went off. It is already loss. It is just a time gap. Correct. Now information came later, but situation are already situation, loss of situation, condition of loss, losing the situation is already there in the past. As on 31st March only we lost it. Now just information is coming. Agreed. Now just information is coming. That is the reason, my dear. It is purely adjusting event. Subsequent events are giving more information or more clarity on the subsequent events, are giving more information or clarity on the events which were existing on 31st March. So this should be recognized as on 31st March 2020-21. Let's say E cross is equal to 2, I will take. That means you will be recording it in 2020-21 financial year. Agree? Yes, that is the matter. Yep. Next, illustration number 2. Yeah, earthquake destroyed a major warehouse go down. Yeah, of ACO Limited on which day? On 20th. Yeah, which day we lost it? 20th May we lost. The accounting year for the year is equal to 31st. That means what? This is equal to 2021-22 is my financial year. Earthquake came on this day and we lost this go down. Yeah, major go down. Fine. The accounts were approved on 30th 6. Okay, this earthquake took place before we close our financial statements. Okay. Yeah. The loss from the earthquake is estimated 30 lakh. Done. State with the reasons whether the loss due to earthquake, is an adjusting event or non-adjusting event. Tell me here, is it earthquake started on 31st March, sir? Now it fell down, sir. Obviously silly, no? Correct. It is not. It is actually purely on 20th 5 2002. Okay, na? 20th 5 2002. Yeah, agreed. Right. So it is, there is no situation, there is no condition, there is no situation or condition, there is no situation or condition as on 20th 5. 20th May, I mean, sorry, not done. On 31st March, there is no situation or condition exist. That is the reason it is a purely non-adjusting event. Purely non-adjusting event. Okay. It is purely, everything is happening. But listen, he told one more thing. There is a major warehouse destroyed. Yeah. So something majorly lost. Right. Isn't it our prima facie, our duty to inform the shareholders, users of financial statements? What do you say? If you hide it, is correct. No? It is obviously cheating. No. Correct. That is the reason. What I say, you disclose it. Yes, sir. Where should I disclose it, sir? Shall I disclose it in the financial statements as in notes, sir? No, sir. Accounting standard does not permit that, sir, because it is purely related to next financial year. But you have to disclose whose job you means. That is board of directors' job. That's why there is a letter. No, let them write in their letter. That is board of directors. Okay, board of directors representation letter. That's it. Okay. Yeah, board of directors will prepare the letter, and in that board's approval, I mean board's letter, let them write that matter. Yeah, right after the financial year end, there is some major accident happened. Not accident, that is okay. That earthquake took place. Because of this, we lost one big warehouse, due to which this is going to be our loss. Yeah, you tell it is already insured. We will get this much money. The rest of the thing is going to be lost to me. Correct, na? Right. Something that is what right. Board's letter means board's report. Right. You can. That is okay. Fine. Yeah, that is what you are supposed to do it. Then next. Yeah. Next point. What I say. Yeah, this is same thing. Question is same. Right. Illustration number 4. The company has filed a legal suit against the debtor. Okay, we already filed a case. Yeah, on whom 15 lakh rupees is recoverable as on 31st March. It is recoverable. That guy did not pay, that's why we went to court. Nothing wrong. The chances of recovery by way of legal suit are not good as per the legal opinion. No guarantee whether you get money or not. Yeah, by the legal counsel. Legal counsel means your lawyer. Okay, legal team, I can say. Yeah, can the company provide for full amount of can the company provide for full amount of 15 lakh rupees as a provision for doubtful debts? Yeah, because you are telling your legal department is telling what you will not get it. Correct. See, what is he telling? The given by the council in the month of April. See, what are they telling? They are giving a result of 31st March ka position. I can say like this. They are giving a result of 31st March ka position. A simple example I'll ask you here. Try to catch this. Suppose you wrote examination in May 2022. Okay. Result will come after 2.5 months or 3 months. So say example. Okay na. May, June, July. Okay na. Suppose July end you got it. Somewhere in July end you got it. If I ask you when did you clear exam? What's your attempt? Will you tell July or will you tell May na? Will you tell July or May na? Obviously I will tell May. My attempt is May attempt. Even I wrote in May 2003. Long ago. Right now, almost 20 years now. 19 years. It's okay. Yeah. So when did you clear means May 2022 you will tell. You wrote already exam. Yeah, ICAI delayed it in correct na in checking your paper. Obviously. Correct na. If they have corrected immediately after you wrote, my examination got over at 2 o'clock. Immediately they check. Other result will come, no. Obviously. How can it be different result here? Same result would have come. Yeah, you already passed here in May attempt. Result came, little delay. That's it. Correct, no? Here also, it is not recoverable as on 31st March. My lawyers took a lot of time, okay, na, to say, oh, it is not recoverable. To give the good news, they took so much time. That is good news, ne? Simply I am telling, it's bad news. Right? That's it. Fine. So it is purely adjusting, my dear. Yes, adjust it. And as on 31st March itself, yes, you have to make provision for doubtful debts. Just one more small adjustment. See, we are writing like they are written like provision for doubtful debts. Correct? You check your schedule 3, schedule 3. Okay, schedule 3 balance sheet. Yeah, balance sheet format with echo. Do you find a word provision for doubtful debts? Check seriously. You will never find. Right? What is the word you will find? You know, allowance for doubtful debts. This is the correct terminology. Allowance for doubtful debts. Yeah, allowance for doubtful debts. Understood? Yeah, it is allowance for doubtful debts. It is not provision for doubtful debts. Okay? Right. Right. Why provision? Why not provision, sir? Why not provision? Why shouldn't we use it? You should not use. One reason. Yeah, you know what is the provision meaning? Provision meaning? Yeah, you should refer accounting standard 29 for that. What standard 29 says? Provision is a liability. Yes, provision is a liability which is measured by significant degree of estimation, which is measured by significant degree of estimation. This is the word. Yes, they use it in accounting standard 29. First, I don't want entirely also. Okay, na? First, what I say, provision is a liability. Tell me, e provision for doubtful debts, which you are using, are you liable to debtor? Are you liable to debtor? That waste fellow who is supposed to pay me is not paying. Correct, na? It is not a payable. It is reduction of a receivable, which is supposed to come is coming down. Are you catching my point? Yes, it is a reduction. It is actually reduction of an asset. Yeah, that's why correct. Now, if it is a provision is a liability, Then in the balance sheet, you show it on the credit side, I mean liability side. No, no, we never show because it is not a provision that we also know. But we, by mistake, correct now, maybe it's like a mistake is occurring again and again for years together, right? We never show this provision for doubtful debts under the liability side. We will show it under the account debts. What is that? Accounts receivable down only we will be writing. Correct now, we will say deduction, reduce from the asset because it is never a liability. Okay, my dear. Yes, see, that's why again provision word, it's okay, should be made for the year ended itself, 31st March only. You should make the provision. Okay, right. Fourth, illustration number 4. In preparing the financial statements of R Limited for the year ended 31st March 2001, you come across the following information. Okay, what is that? State with reasons how would you deal, correct now, how would you deal with this in the financial statements? We'll see. The company invested 100 lakhs in April 2000, 100 lakh in April 2001. Fine, we spent already, investment before approval of financial statements by the board of directors in acquisition of another company. Means it's an amalgamation. Okay, it is an amalgamation or purchase, a business combination. Many words are there for that. Okay, you got it. Nice. The negotiations for which had started during the year. We already started negotiation. Negotiation means discussions. Array, you sell what rate? I will quote one. They will say no. We'll go for valuation. That day, so many things will be there. Yeah, correct. Now, if we go to purchase tomato also, correct. Now we'll inquire here, there, and all. We'll ask bargain. Correct. Now, true. Why not? Right? Why not? That if when it is another company, correct na, for all tomato also we are bargaining. Tomato, I mean, in case of a company, will you just go and purchase it? No, it's a crores and crores of worth. Maybe it takes some time. But question, shall I account this amalgamation in the year 2000, in the year 2020, 2021 financial year, 21-22 financial year? That is the question. Do you say it is an adjusting event or do you say it is non-adjusting event? Correct question. Do you say it is adjusting event or non-adjusting event? Right. My answer straight and simple. It is non-adjusting event. You should not record it in 2021. Why? As on 31st March, can I say other company assets are mine? Fine. No. Can you say you have control over the other company as on 31st March? No way. Correct na? When did you get the power on the other company? I got the power only in the month of April. When did you pay? In the month of April. You gave their consideration. Correct? We got the control over the other company in the month of April. There is no situation, no condition, nothing as on 31st March. Obviously. Correct na? That's the reason it's purely non-adjusting event. But acquisition of a company is obviously not a small matter, material matter. Yeah, you can inform your members, you can inform your users, yes, through board of directors report. Yes, you can mention this in the board of directors report because it is very crucial. But recognizing the journal entry, recognizing the other company assets, liabilities, and etc. in our books as on 31st March, sorry. Next. See, when I go and speak to somebody, I'll go to a shop and I'll ask, "Arey, mobile how much here?" A shop wala will tell, "Oh, sir, 30,000 rupees, sir." Then I will bargain. I brought him to 28,000. Then I'll tell, "Just give me 2 minutes, I'll come." Okay, because I'll go to next shop and I'll bargain there also. Suppose this guy is giving me 27,000. I'll purchase from here. That's all, nothing wrong. Correct now, just inquiring, negotiation will not bind us. My dear, negotiation will never bind us. Okay, negotiation will not bind. So there is no agreement as on 31st March. purely non-adjusting, it should be recorded in the next financial year, not in the current financial year. Understood? Correct. See what is this? Yes, regarding this acquisition, another company should be disclosed in the report of approving authority. Okay, company situation may board of directors report, I will tell. If it is other than company, whatever is the, management is preparing what kind of report, our report only, in that report you can mention it. That's it. Yep. Illustration number 5. A limited company closed its accounting year on 30th 6 2001. See, it's not our, okay, closed its accounting year that day, and the accounts for that period are completed by, what is that, 20th August. It is not 31st March, my dear, 30th 6. Approved by the board is on 20th August. The company was engaged in laying pipeline for the oil company, okay, deep beneath the earth. Okay, under the ground they are doing it. While doing the boring work on 1/9, it had met a rocky surface, for which it has estimated that this would be an extra cost, which tuned to 80 lakh. And what will happen? You are required to state with the reason how the event is supposed to be. Right. First and foremost question. Yeah, when I say events occurring after the balance sheet date. Events means which events? After 31st March. That means in my example I'll say 1/7/2021. Yeah, till what date? Till board of director approve your financial statements. Correct na? When is your financial statement approved? 20th August 2021. Correct na? Right. When did you get to know this? On 1st November. Sorry, 1st September. 1st September you got to know. Are books already closed, man? Correct na? Nothing to do. This will be booked in the next financial year. Correct na? See, we will consider the events which are happening after the balance sheet date till the financial statements are being approved by board of directors. Till that date. Yeah, if something you got it after, it is not within the scope of accounting standard. It is not within the scope of accounting standard 4. Correct na? Right. Yeah. On which date of approval? Correct. In the given case, correct na? In this case, the incident was expected to push up cost. Correct na? But it is after the date of approval. After the date of approval. That's why I can't. There's nothing to be done in this regard. Yeah, we'll do it in the next year. That's it. Next year we'll book the loss, whatever extra cost, etc. Next, while preparing the final accounts for the year ended 31st March, yeah, a company made a provision for bad debts. Yep. A company made a provision for bad debts. Yes. Santosh Panda, hello. Yes. So what is that? A company made a provision for bad debt at the rate of 5%. Then they already made for this total debtors. Say total debtors is equal to 1 lakh. Okay, and they made a provision 5%. 5% means 5,000 ka already there is allowance for doubtful debt, something like that is there. In the last week of February 2001, a trade receivable of 2 lakh rupees has suffered heavy losses due to an earthquake. Who? Customer lost. In customer place means some earthquake came. This last. Correct. No, only in this accounts books, no, earthquake will come just like that. No, yeah. Whenever they want, it will come. Right. Fine. It's okay. We can't help them. Right. Okay. They got, what is that? 2 lakh rupees loss. Right. Heavy loss due to earthquake. The loss was not covered by any insurance policy. It is not covered by any insurance policy, means full gone. Right. And what is that? In April 2001, trade receivable became bad debt, bankrupt also. Then paisa nahi aayega. Can the company provide the full loss arising out of insolvency of the trade receivable for the year ended 31st March? Tell me. Yes. Because, yeah, the reason is what, my dear? He was already bad in the month of February itself. It took time for him to declare himself as a bankrupt, correct? Insolvent. That's it. Maybe there is a procedure, right? So it was already bad. It was already bad. On which day? It is already bad on 31st March. Information only came out later. Correct. In the month of April, information came. But matter being bad is already there. It is not a new thing. Agree? Purely. That's the reason. Okay. That is the reason, my dear. I hope you understood. Yeah. Because of this reason, since already situation was there, yeah, you have to book the loss of 2 lakh rupees as on 31st March 2021 itself. You are supposed to book it. Okay, right. Next, illustration number 7. Yeah, during the year 2001-2, Raj Limited was sued by a competitor. Okay, someone filed a case against us. Okay, 15 lakh for infringement of a trademark. Okay, I mean, we used their trademark or something like that, some problem. Based on the advice of the company legal counsel, Raj Limited provided for a sum 10 lakh rupees for the year ended 31st March 2000. This one. 18th May, court decided in favor of the party alleging infringement. Correct, na? And we are supposed to pay 14 lakh rupees. Court decided, court concluded, and in this court conclusion, what is happening? Yeah, court told nothing doing. You have to pay 14. You have to pay 14 lakh. Okay, we'll pay 14. Correct, na? Right. But when is that conclusion happened? 18th May. Yeah. Financial statements closed on. Financial statements were prepared by the company, approved by the management on 30th May. That is later on. I mean, before this only court conclusion came. Tell me, on 31st March, we had a provision of 10 lakh. What is that provision amount? 10 lakh. Sure. Right. What about, subsequently I paid 14 lakh and closed the case. Agreed. Now, if 4 lakh rupees, it is increase. Shall I go back and add it here? Or shall I book the loss in the next financial year? See, discussion is very simple. Provision is provision, correct? Na? Provision 10 lakh rupees I told. Agree? This 10 lakh rupees when I am saying, okay, yeah, try to understand. This 10 lakh rupees what I am referring to is based on the estimation by my lawyer team. Correct. Subsequently, fact came, no? Yeah, before you close the books of account, you lost the case. That's why you have to make a provision for what number? Yeah, you should make a provision for the full 14 lakh rupees. Correct, na? It is just in information. Case already was there. Correct, na? My lawyer's estimation was not correct. My lawyer thought something else. But what happened is something other than that. Correct, na? Subsequent event is very clearly telling that you paid also, you had a liability of 14 lakh means actually e-provision. This is an estimation problem. That's why go back. Subsequent events are very clearly telling what you wrote provision on 31st March is not sufficient. So make sufficient provision for this loss. Correct? Yes, it's purely adjusting event. Purely adjusting event. Okay, that's it. Now, that's it, my dear. That is about your accounting standard 4 completed. Now, we are entering into accounting standard 5 related questions. Okay, na? Right. Just give me a second. Yes, Accounting Standard 5 related illustrations. Let us see, my dear. Give me a second. Let me go to the yep. This is the illustration. Illustration number 1. Yeah, fuel charges, fuel surcharge is billed by State Electricity Board by at provisional rate. This is crucial. Provisional rating. You know, provisional. Suppose you are paying your monthly power bill. Correct? Yes, you are paying power bill. Is it the power bill final rate? Do you think it is a final rate? Sorry, what you are paying is a provisional rate. How it happens? See, power generation, power companies, no? I'll explain you a little. There will be a company called power generation company. I mean, make the power. They produce the power. Done. Okay. Power generation. Generation happens. Okay. Next, our power has to reach city, no? Yeah. Once correct, na? Power transmission. Next is transmission. Transmission companies. It has to come from that place to this place. The big lines outskirts may you can see very big lines, power lines will be there. No, that is all held by some other companies. Yeah. Next, right, once it reaches the city, it has to distribute. Power should go to each home and factory, etc. Correct? Na? That is distribution company will call. Distribution company. So generally, it will happen like generation companies are different, transmission companies are different, distribution companies are different. Who will come and collect money from me? I will pay to, right, in Bangalore, I'll pay money to Bescom. Okay, that is power distribution. They don't generate power. Someone else will generate. Someone else transmit. They supply to my house. Okay, I will pay power bill. Okay, right. See what happens, billing will happen. Generation should bill. To whom? Distribution. Yeah, transmission also should bill to distribution. Generation people, there will be some target like on the cost, they will charge some 5%, 10%, something like that. So how do I know total cost for the current financial year, my dear? How do I know? I obviously don't know. Based on the estimation, estimation they will have, then they will say per unit, 1 unit ko I will charge 6 rupees per unit, something like that they will charge. 6 exact number, sorry, that is not the right number. So they start billing for the full year at the rate of 6 based on the experience. Done. Now at the year end, each generation company, the people will sit and calculate what are their total cost. Okay, yeah, and so in that cost they realize, say example, 6 rupees is not the price here. We should have charged 6.1 rupee per unit. Okay. So then again, just the same 6.1 only they will charge it to distribution company. Yeah, distribution company obviously in effect it will charge it to me. When I will get this bill, extra bill, I will get it either in the month of April or May. You know, one new line they will call surcharge. They will tell an item called surcharge, and they will do it. I mean, they will book it on us. What do they do? Ravi Kanth full year, how much they 10,000 units consumed. Okay, already charged into 6 means 60,000 already charged. Correct. 0.1, what do? You have to charge. That means 1,000 rupees extra bill will come in that April month or March month mein aa jayega. It is like that. Hope you followed me. Yeah. So State Electricity Board will be charging at a provisional bill. Yes. Final bill for fuel surcharge, see surcharge, 5.3 rupees lakhs for the period of October to September has been received and paid in the month of February. Okay, however, the same was accounted in 2008-9. Okay. Comment on the accounting treatment done by the said case. See, this is related to which period? You have to read it carefully. Yeah, this is related to which period, my dear friend? 2001 to September 2007. It is not recent. Correct, na? And you have prepared the bill on which date? February 2008. In the current year, you billed it, no? Even though it is related to last, We can't do anything now. Now we can't go back to 2001 and go back and correct it. Come, correct na? Right. You record it in as on. Correct na? Today February. Today you send the bill. Today only you will be eligible to get the money. That's it. Today only you are supposed to record it. Just go to the answer. The final bill having been paid in the month of February. Correct na? Should have been accounted. Yes, obviously 2008. Yeah, this is 2008 means 2007-8 financial statements mein likhna. Correct. However, it seems as a result of error or omission. Correct. In the statement of financial statements for prior period, it's purely error. I mean, they should have done this job every year. They should have done this job. I thought they will ask a question in different style, but the question came in another style. Okay, right. For the year ended 31st March 2008, this material change has arisen in the current period. Correct. So therefore, this should be a prior period item. Yep. Yeah, those years number is coming in the current year. Correct. Now they should have adjusted only in the last year. Since you forgot to adjust it, the whole bill came into current year. Book in the current year, but present it separately. Do you know what is the prior period error definition? What do you mean by? Right? What do you mean by? It is an income or expense. It is income or expense recorded in the current year, related to the last year. Okay, recorded in the current year, related to previous year or years, because of error or omission. It's purely error or omission only. Right? I can say omission because they must be having the information, but they realized now. Right? That's the reason. Purely a prior period item. It should be presented like that. Okay. Right. Next, illustration number 2. During the year 2001-2, a medium-sized manufacturing company, wrote down its inventory to net realizable value by 5 lakh. Is a separate disclosure necessary? See, if you say this is a material item, first, in accounting standard 5, we'll discuss about ordinary activities, extraordinary activities, and one more word will come, exceptional activity. Okay, this is one of the exceptional category which is given in the standard. They have given 7 items. Out of this is one of them. Okay, right. So carefully focus. Okay, carefully you are supposed to focus. Net realizable value by net NRV. NRV is how much number, my dear? 5 lakh rupees is the number. Yes. Now my point is, what is my point, sir? Yep. Is not working. Working now. Yes. Writing down the inventory to net realizable value is one of the exceptional item. And if 5 lakh rupees, if you say it is my material, it is material to the company, yes, disclose it separately. But it is not extraordinary item, it is exceptional item. Okay, that's it. Company signed an agreement with the employee union on 1st 9 for the revision of wages retrospective effect from 30th 9. 30th 9 2001. That means retrospectively you are giving the effect. This should cost the additional company 5 lakh rupees per annum. Is it necessary for the amount paid? Is there a disclosure required? Yeah, here you need to focus. First of all, is it an error? Is it a prior period error? Is it a prior period error? Question. Is it a prior period error? No, not at all. Why? Where is the error? Correct, na? Is there any omission? No. Yeah, how do I know that I will enter into, do you think I can dream it on 31st March only? That I will be, right, on 1st September will enter into agreement? Obviously not. Correct. Even though because of retrospective effect and related to last year, there is some loss. Correct, na? When we are paying extra amount. Agree? Right. So now the point is, it is not a prior period item. Next. Is it ordinary or not? It is a purely ordinary activity. Why purely ordinary? Yes, If not every year, obviously labor will come and ask you for revision in their wages, which is natural. It happens. Correct. Everybody, even employee, I'll also go and ask. If they don't increase, then I will find another company. What to do? Correct. Na? Yes, ordinary. Is it exception? Is it extraordinary? No, no, no. It is ordinary. But it is exceptional. You can record it as exceptional item if material. If the amount is material. Okay, right. Then you are supposed to show it separately. Then explain it. Otherwise, not required. Material, immaterial, as you know, it depends upon the company to company. Correct, na? Their position, etc., etc. You are supposed to consider. That's it. Yes. See, what is he saying? Circumstance which may require a separate disclosure of item of income in accordance with 5 include. Yes, because in the list of 7 items were there. Out of that, this is one of the list. That's why show it separately. Right. Next, it cannot be taken as error, which we discussed. Correct. It should be included in the current wages. Right. But it can be mentioned in the additional wages and expenditure. Correct. If it does not, yes, it does not qualify for extraordinary. I told it is ordinary. It's purely ordinary activity, but based on the size and nature and incidence of this transaction, disclosure may be relevant. If you feel it is material, correct, na? Right. Nature wise, it is normal, ordinary, but you can disclose it. If you feel it is material to the company, that's all I would like to say. Right. Illustration number 3. The company finds that inventory sheets of 31st March 2001 did not include 2 pages containing details of inventory worth 1.5 lakhs. It did not include 2 pages. I mean, see, when you are doing the stock take, we call, what do you call? Stock take. I mean, stock count, you can say. On 31st March, our people will go physically check whether inventory is there, what amount of inventory is there, in which condition it is there. You getting my point? Yeah, people do check everything. Obviously, it's required. Right. So, somebody checked, it seems, and that guy missed out 2 pages. He kept, misplaced the 2 physically, whatever he wrote. He must have taken some 30-40 pages. Out of that, 1-2 missed out. So now that 2 pages has the material worth of 14.5 lakh worth of material was there in that pages. Instead, how will you deal with the following matters? Yes, it is purely omission. Isn't it omission, my dear? How can you forget here? How can you miss out? That is their negligence. Correct, na? Yes. Yes, obviously it is a prior period error. It is a prior period error. Correct? Yes. Rectification of error, inventory valuation, prior period. Separate disclosure of this item is required. Obviously. Right? Illustration number 4. Yeah. Now explain whether the following, explain whether the following will constitute a change in accounting policy or not. Just go through. Introduction of a formal retirement gratuity scheme by the employer in the place of ad hoc. Ad hoc means baseless, I can say. What do I can say? Baseless. I mean simply. Okay. Some employee come. Okay. He worked for so many years. Yeah, take 2 lakh rupees and go. Example. How you determined 2 lakh? No base. It's not like number of years into completed service years. You understand? Yeah, 15/26. That this no calculation. Right away I gave some 2 lakh. How means ad hoc? That's all. That is called ad hoc. There is no base. Simply, there was no ex gratia policy only with the company. Now you introduced a formal retirement benefit policy. First, change in policy means what? There must be something. Change means what? In new policy, go out and this one come. That is change. Now khali nothing is there. Correct. Now there is no policy. Now you are bringing one. That is, how can you call it as change? Change means something must be there, and now you're taking it out and you're putting a new one, then yes, say yes. Otherwise, it is not. Got it? Yes. So, is it change in policy? No. Sorry, not a change. Management decided to pay pension to these employees who have retired after completing 5 years of service in the organization. Such employee will get a pension of 20,000 per month. Earlier, there was no such scheme. See, this is also like that. In the past, is there any policy, any scheme? No scheme. Now you brought a new scheme. New scheme is not a change. Correct? A new scheme in the place of old scheme is a change. Understand? Right. So that you need to. So what's happening? Just a second. Yes. That's it. We are through with accounting standard 5 over. That these are the questions given. Accounting standard 7. Come to accounting standard 7. Percentage completion method. Yeah, percentage completion method. Excel Limited commenced a construction contract. Yeah, on 1/4/2001. Fine. The fixed contract price. Okay, fixed contract price. Agreed is equal to 2 lakh. Done. Company incurred 81 lakh in the current year for 45% of the work. Done. And received 79,000 already. The cost incurred was 89,000 rupees to cost incurred in 2002-3 was 89,000 rupees to complete the rest of the work. Fine. First and foremost, in such kind of questions, you check two things. One, are you totally into the profit or loss? First, tell me, are you totally into profit or loss? Total cost, company already incurred how much? 81 plus. Correct. Now, what is your total cost? Simple calculation. What is your total cost? 81 in the first year, 89 in the next year. Okay, 89 means 170,000. What is your revenue? So your sales amount is equal to 2 lakh. Correct. So that means you are already obviously profit situation. Excellent. Now, since you are into profit situation, now you come to percentage completion method. If you are making loss, means no percentage. You have to book full loss. That's all. Correct. That is the reason I calculated first. Are you in profit or are you in loss? Okay, excellent. We are in profit. Now, the company incurred 81,000. Yeah, what is that you incurred? 81,000. 81,000 incurred out of total how much? 170,000. 170,000 is the total into 100. That means what is the total percentage? 81,000 divided by 170,000 into 100. Something wrong I typed. 81 divided by 170 into 100. That means I have completed 47.65. E65 percentage is what? Percentage of completion. Percentage of completion. Done. So you should, what are you supposed to do? You have to book the revenue. How much revenue? Yes, 2 lakh is the total revenue, na? Correct. Into E percentage apply. Yes, 2 lakh into 47.65 percentage. Comes to 95,300 rupees is the sales you should book in the current year. Remaining amount you should book in the next year. Okay, right. Let us see that question. For the year, for 45% of the contract. Okay, how did you get 45% exactly? Okay, 1 second. He gave the percentage. 45% work is achieved. Okay, done. Understood. He did not go by, I'm sorry, he did not go by the percentage completion. Maybe he has done it in surveyor method or something. Okay, that's why when he has given the 45%, then why should I? That I didn't read carefully. That's all. Okay, right. That's why you can say directly 2 lakh. Correct, no? 2 lakh into 45% you can apply. Yes, 2 lakh into 45% you can apply, 90,000 will come. And your actual cost is equal to 81,000. Book 81,000. Book the profit of 9,000. Next, remaining 55%, that is 110. Yeah, and cost is known and the profit is this number for the next financial year. Suppose is 45% if he had not given, then you are supposed to calculate in this fashion. Which fashion? Yeah, then you have to calculate percentage under 81,000 divided by 170,000 into 100. When are we supposed to do this? When are we supposed to do this? When percentage is not given. Okay, when percentage is not given. When percentage is not given, you should do this method, right? E-calculation you should do. When percentage is clear, then obviously not required. Okay, that was my mistake. I didn't read it carefully. Okay, fine. Examples show the examples you can try. Illustrations I will try. Okay. This illustration is good actually. That's why let me try it. Small only. Yeah. Contract price fixed 600. Super. Cost incurred till date 390. Estimated to complete 260. That means what is your total cost for 100% total cost? Yeah, total cost for 100% completion. Total cost for 100% completion is equal to how much? 390 plus 260. That is equal to 650. Now, has he given any percentage like earlier sum? No. So you compute it. Now, what is that? Cost till date. Cost till date, how much you spent divided by total cost for 100%. Total cost for 100% completion. Yeah, into 100. Then you are going to get percentage completion. Till date, how much cost incurred to date? 390. Yep. Next step. Out of how much? 650. Correct na? Yes. Into 100. Yeah. But before that you should do, I told already, but I didn't do it. I'll do it. No problem. It comes to 60% is my percentage. How much percentage coming, my dear? 60. Correct? Right. Listen carefully. What is your total cost? 650. But your revenue how much? 600. That means, isn't it? Aren't you expecting a loss of 50? Correct. Now your sales are total sales over the 1 to 3 years 600, but in the total expenditure in the next period is going to be 650. Isn't it a loss to you overall? Pakka loss. Since it is pakka loss, what are you supposed to do? Yes, you are supposed to book this last 50 rupees immediately. Immediately you have to book it. The 50 should be charged to immediately charged to profit and loss statement. Okay, right. Let me see if they have given some P&L kind. Yes, they have given good. Contract price is 360. How means 60% I have completed. 600 is the total money. So 60% is, that is how you got 360. Revenue correct. Your cost is 390. Now, the extra loss, net loss, sorry, provision you should make it for, what is this provision for loss? Yeah, this is 1000 times wrong, Amma. Correct yourself. Okay, whenever there is an expected loss, you are supposed to book it immediately. It is not on percentage basis. Okay, right. You please correct here. It has to be 50. Yeah, then what is that? 390 plus this is equal to 430. Yes, here it is equal to 430. Totally there is a loss of 70. This is perfect answer. Please make corrections in your textbook. Fine. Yes. Remaining things, remaining question and answers, as I told you, in 2-3 hours time totally will be able to complete your point. Thank you and wish you the best. things remaining as time total, and wish you the best.